Welcome to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to episode 189 of the AJ Brown Show. Today is June 20th. My name is Cyprian
Options
Francis,
expiration.
and with me, as always, Mr. AJ Brown. As you mentioned, today is options expiration, which is always a more exciting day in your world. I think the big news was yesterday was kind of a closed market day. We had a lot of foreign policy chatter in the air. We're getting a pretty active market today. What are you seeing? Where do you want to begin today's show?
I mean, how can you we had all sorts of things this week that could have affected the market. We had the Fed met and gave an interesting press conference on Wednesday. We had progress on the spending bill, but what was, of course, the big news headline was Israel and Iran, and is the U.S. going to jump in or not? Uh, that's where we're at.
And I have a question on that. The market was the stock market was closed yesterday. The futures market was open. Did you log on at all? Did you check things? It's one of those weird days where we have a closed market, an open market, a bit of an open session, a closed session, then an open session. And the reason that I ask is, as soon as the futures market opened back up yesterday, after that press conference of us not going to have some sort of reaction to Iran, the futures skyrocketed. I mean, the optimism was, hey, if the US goes to war, that's bad for the stock market. If we continue to hold, that's good for the stock market. Was that kind of your sentiment? Were you just waiting for the market to open back up to kind of see where we could just kind of, I don't know, figure out what's next?
Yeah, there's a lot of speculation. It was really interesting. I don't know if you kind of paid attention to the minute by minute, but you know, at one point, shortly after, I think Monday, there were news leaks that Iran wanted to meet with the US and restart nuclear deals through back channels, and that this might be a short skirmish, right? And so the market kind of got excited about that. Then, of course, soon after that, we got a whole bunch of Truth Social and X posts saying that we are making progress, and this was from Trump. So they made a big deal about saying that this is not a U.S. thing, this is an Israel thing. But then Trump came and said we're making progress, and we know where the leader of Iran is, and but we're not going to take him out yet, and stuff like that. So the market was like, what? Right? Because the market doesn't want to disturb, especially the oil markets, right? Investors don't want to see the oil markets go crazy, whether it's you know taking Iran offline with their oil sales, or whether it's Iran blocking the Suez Canal and messing up trade. Investors don't want any of that. So to hear the hawkishness from Trump, and Trump said, "I'm going to make a decision in the next hour, in the next 24 hours," and then the next day, everybody is waiting to hear about his decision. And he spent like 4 hours raising flagpoles at the White House, two amazing flagpoles. And it was like a 4 hour press conference where he went on one of his, where he goes from subject to subject to subject, wherever all the reporters are like, this guy needs some Adderall to keep focused. And really, all he wanted to talk about was the two flagpoles. And finally, somebody's like, "What's your thoughts on Iran?" And he's like, we're going to give it a week or two. I'm not going to tell you. So that wait and see, they did that with the tariffs, right? and it caused some craziness with the markets. If you look at it in the patterns on the charts, I mean, we're in a wait and see, getting ready for a breakout pattern. We've been talking about this for 2 or 3 weeks now. This pattern that we see here, if I strip away all of my overlays and just show you what's happening here, this kind of sideways consolidation, hitting resistance at 6,000, but loitering around that, not knowing whether you're going up or down. My signals are getting reversed. If I show you my analog signals on the confirmation there, this is where the 3-day exponential moving average is just kind of hugging around the 5-day exponential moving average. Um, Nothing is conclusive. People are literally in a wait and see mode on Iran. So, yeah, um, that's where we're at.
Yeah, and that's Iran on top of the negotiations between Russia and Ukraine. We did have a Fed, rate decision midweek 2 days ago that usually traditionally has a major impact on the market. But what I was seeing was that it was very similar to the last meeting in terms of obviously their decision, but in the rhetoric, following up as well. However, I did hear Powell mention inflation a little bit more than usual, and the concept of, oh, hey, these tariffs are going to be kind of a one-time jolt to the system. And I don't know if that's believable or not, because it seems like if we implement these, it's like, who's eating the cost of the tariffs? Uh, is it the companies? Is it the consumer? And so you're right, AJ, in that these traditional policies and actions aren't really having an effect on the market. We're really reacting to these bigger news events. Although the data does seem to continue to come in, choppy, a little bit good here, a little bit good there. I believe you have some retail sales here.
Yeah, retail sales were reported on Tuesday, and it's not. You got to remember, even though people are saying the words of the U.S. is returning to manufacturing, manufacturing is such a small portion of the U.S. economy. The U.S. economy is built on consumerism, right? And retail sales is one of the most important. Retail sales and inflation of prices is probably the most important metrics. And so this was kind of alarming to see. Not only was retail sales not including cars, retail sales not including cars and gas, these things were down much more than expected, and also down much more than last one. So that's never a good sign when you've got retail sales dropping significantly, like we are seeing. Housing starts, permits down. Everything behind the scenes seems that we're kind of slowing down the economy. But at the same time, all this tariffs, and the tariffs, remember, we were talking about the taco, right? But what remains, so I don't know if this was the strategy or not, but tariffs went on at crazy numbers. We all remember that. And then they pulled back, but they didn't pull back to where they were. There are tariffs. In fact, we just had something shipped from Canada, and in order to receive it at the shipping depot, we got a tariff bill, right? So bills from stuff that we purchased from Canada that we've never had to pay out of our pocket in order to receive it. So the tariffs are in place. They're just not those crazy numbers, right? So that's going to weigh on things, raise the prices. And so the Fed's going to be in an interesting place as to, how do I do my monetary policy? Things are slowing down. So in theory, I should be dropping my interest rates, and maybe slowing down on my quantitative tightening. But at the same time, if prices start to go up because of tariffs, um, well, and it depends on if the business decides to absorb these tariffs or if they decide to pass them on to consumers, where we're going to see whether it's at the producer's price index or the consumer price index level. But this is going to weigh on the economy, which means maybe we should be raising interest rates to control prices to so the Fed's going to be in a very interesting place. And of course, Donald Trump making fun of the Fed, saying it's too, nicknaming Jerome Powell too late Powell. um yeah, I don't know where that's
Pretty
going
har-
to go.
He's pretty harsh about it too. He's just like, this guy, like, he's
I mean,
stupid and this and
he's
that.
harsh about everything, isn't he? He
Yeah,
throws things. I mean, he was harsh about Elon, and Elon was harsh about him like what, a week or two ago, and now it looks like they're being friends. So, he comes out of the gate fighting, always coming out of the gate fighting, and then pulling back and a lot of bite, or what is it? A lot of bark, but not a lot of bite, maybe.
yeah, yeah. Um, and you one of the other Fed governors was speaking this morning, and I think that's what lifted the market a little bit in pre-market. I don't know which one of the officials it was, but he said they could cut as soon as July,
July.
and that
Yeah.
was a big, positive. But isn't that kind of like when I mentioned that Powell referenced inflation increasing? It kind of goes against their model, right? Where it's like, oh, we expect inflation to be a little bit higher than we anticipated this year because of the tariffs. Oh, and we're going to cut rates, right? I believe that's a stagflation concept. Is that right?
Yeah, that's absolutely right. The scoop is the Fed, I think they're doing a little bit. So Trump comes out with that bark and they have to do a little bit of damage control. So, Jerome Powell had that press conference on Wednesday where he said what he said, and then Trump attacked him. And so, kind of a credibility thing. It makes sense that one of the Fed presidents, not Powell, because Powell doesn't want to look like he has egg on his face. So he's not going to retract what he said. But the Fed president comes out kind of agreeing with Trump and saying, but I think it's more kind of playing out in the public sentiment, or investor mind sentiment, this little back and forth. The Fed, in my experience, is pretty much going to play it day by day. You know, Powell said two rate cuts, one in September, one in December, unless something drastically changes. I mean, that's basically what I distilled out of what he said. And that's what investors, if you look over here, I've got the sentiment meter on there. The July 30th, this bar here, 85.5% of investors thinking that no rate cut in July, even though that Fed president said what he said. And then come September, that's when we expect to see a rate cut. And then October, um, you know, hold steady. And then December, see the second rate cut. So that's kind of where investor sentiment is. I know they're playing out some of these headlines, but I think they're going to stay that course. And then, of course, they also use that Fed tightening. They haven't updated my graph. We mentioned that yesterday was a federal holiday, and so the none of the federal government or any of the ancillary organizations were working. So usually they update this for me. This is the same result as last week. So they haven't updated it yet. I'm sure they'll update it 2 weeks for next week, but they actually are showing a little tiny bit of reversal on quantitative tightening and instead quantitative easing. They seem to be doing that a little bit here and there. They quantitative ease and then they tighten, ease, tighten. So maybe this is a part of that same kind of strategy, but it'll be interesting to see how they're actually using these two tools and also the whole rhetoric playing out in the public sentiment.
With all that said, if we want to reference the S&P, I mean, we've kind of been in this same range for almost 2 weeks, if not, a little bit of an uptick. But it's definitely reactionary and not I mean, what's your take? It seems like it's a good time to start putting those options trades on in case we get that pullback that I guess we would want if we want to continue to see the stock market moving higher, through the rest of the year.
Well, there's a strategy that I like for this. It's a straddle strangle type strategy. So a straddle is where you buy a put option and you buy a call option. So when the market goes in either direction, you will, win. And a strangle is the same exact thing, although the strike prices aren't exactly the same. So, what we're seeing here is basically that wait and see mentality, right? Where the investors don't know whether to be buying or selling. So, they're not doing anything except for, and I'm going to change gears on you here, Sip, except for we are seeing this is the VIX, we are seeing investors buying options as protection. So they're not doing anything with their main equity holdings right now, but we are seeing them purchase options in order to protect themselves, right? So that's an interesting thing because what it means is that investors are getting nervous. The longer we don't give them the information they want to be able to make buying or selling decisions, the more antsy they're going to get, the more nervous they're going to get, the more likely that when they finally get any sort of hint at direction, they'll probably overreact, right? When you're in an echo chamber and you hear nothing for a long time or even longer, when you finally do hear something, you overreact. So that is usually the cause of a breakout. And it depends on which way that news goes, whether it's positive or negative. But I don't foresee us staying at 6,000 much longer. Either we're going to get a hint of good news that's going to move the markets and we'll see a heck ton of buying, or we're going to get some bad news. We're going to see a heck ton of selling. But I don't see us staying at 6,000, you know, through the month of July. I see us doing some sort of break. Question is, what direction will it make? That's why the straddle or strangle. Or if you guys out there are doing like I'm doing, where you've got some bots trading for you during the day, you could actually set up a couple of, indicators, a couple of, this would be on the custom side, but you could actually monitor for an increase in acceleration and velocity of price. And if it's smooth and consistent, you could actually have your bot, catch these breakouts when they occur. It would be a very elegant type, and you'd want to do it with automatic trading. But those are where I'm thinking for this week.
Yeah, and that's one of those 27 option strategies where it's like we don't care if it goes up or down. We just care that it goes in a drastic way, and or you can do the
Yep.
opposite of we're gonna bet on nothing happening, and we may be reaching the end of that wait and hold period, because I don't know like how
Mhm.
long that can go, but there are a lot of tensions, in the air. And I think maybe last show or a couple shows ago, we talked about that spark of a fire. What could it be? And, whenever I see these images of these ballistic missiles flying, I'm like, that could be one of these sparks where it just like breaks through the
Mhm.
defense system, or there's some nuclear something in there. And,
Well, the latest escalation, I don't know if you paid attention to yesterday, but the latest one is Iran is using some of those Russian-made hypersonic missiles that do break through the dome because they go so fast. I think they've used 4 or 5 of them and really hit a couple of key Israeli targets. I mean, that's a notch up in escalation. So I think that's why we're seeing. I have the intraday chart pulled up. Let's take a look. This is a 15-minute chart. So, we opened a little bit higher in excitement. And let me zoom in even further. This is Monday, Tuesday, Wednesday, and now Friday. Thursday was closed. So we opened with a little bit of excitement, but very quickly we've been moderating that excitement. And we've been doing that pretty much every day. This was some excitement that maybe this would be a short skirmish, and then some Truth Social posts, and then, news from the Fed right here. And now this is where we're at today.
Yeah, and heading into the weekend is always I don't know, it seems like Fridays have been much more exciting than in previous years, just because we don't know what's going to happen from all this. Um,
We don't know what's going to happen on any front. The budget, we don't know what's going to happen on any front with trade and tariffs. Last week the China-US talks and fizzled out again. Trump was at the G7 and they were announcing some, discussions about the Canadian US. Maybe there might be a trade deal there. And then Trump had to leave early. So that left up in the air. And there's so many open ends. And I think Trump likes that. He likes the little mystique and the secrecy of I'm the one making the decisions and stuff, but investors don't like
yeah,
that.
and we're still on hold with the China decision, right? Because that was a whole week affair of, hey, we have a deal with China. We don't really
Didn't
yeah,
it
there's
fizzled.
nobody signed off on it. That could be a market mover. Either way, if the market moves up, if the market moves down, if it moves sideways, if it doesn't, that's what AJ and the team at Trading Trainer are here to help guide you along the way of how to utilize these wonderful option strategies to make them work for you, for your portfolio, for your risk appetite. And if you're interested in following along, joining the community, getting a little bit more access, head on over to AJ's Quick Links page. I just threw the link in the chat. This has got a bunch of good stuff. We've got his socials. Throughout the rest of the show, you'll see some indicators, little blue and red arrows that can be accessed in AJ's free indicator suite. If you want to learn more about some of the premium selling that we're going to discuss, there's a free workshop on here, some custom coaching information, and just more details about the program community in itself. So the link to that is in the chat. We've got some nice names on the watch list. We are streaming live, folks. So if you have a name that you want AJ to run through, feel free to throw it in the chat as well. We're feeling good about last week's pick of the week, so we're going to see if we can double down on that. But we're going to take a break. Sit tight, folks. We'll be back in a jiffy.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right. Very rarely, AJ, do we have back-to-back weeks of your pick of the week. And so, before the show, you're saying that people are making money on this and there's still some opportunity to get in. So let's go ahead and pull up last week's pick of the week, this week's pick of the week. Bath and Body Works, ticker symbol BBI. What are you liking in the continuation here?
Yep, ticker symbol BBWI is man, I am very happy. On Monday, we got our end of day signal. On Tuesday, we got our follow through. A lot of my traders and I jumped into this. So we jumped into this with long positions. So we either bought our. So let me back up. Bath and Body Works is in a sector that isn't going, it could ultimately be affected by the broad market. But right now, this sector is kind of going on its own in a nice sideways choppy pattern, which is a premium seller's dream. So Bath and Body Works found its bottom. That's where I picked up on Monday evening. Tuesday, I got follow through, entered into that trade. We're already up about a couple bucks on a 26. We're up 10% on the stock price. A lot of us leveraged that particular trade. What does that mean? For the initial covering position, instead of doing shares of stock, we actually bought the March 2026 option. So that's a good ways out. And it was pretty deep in the money. It was a $15 call. And why we do that is when you go that far out in time and deep in the money, you create a almost perfect option substitute. We call that trading at parity. Um, that means that this option, this call option, is going to move dollar for dollar with the stock. So if the stock moves from, currently it's at 28 bucks, if it moves from 28 bucks to 29 bucks, this particular option, let's go ahead and pull it up. It's currently, we're talking about the March 20th, 2026, and we're talking about the $15 call. This thing is currently trading at $13.55. So when this one thing moves from 28 to 29, this will move from 13.55 to 14.55. So there's that dollar for dollar movement, only it's on a cheaper price. Instead of having to pay $28 a share, you're only paying $13.55 a share. So you almost get that 2-for-1 leverage, but it then acts as a perfect option substitute. We can then sell premium. In either case, if you have this initial covering position in place, we can sell calls in the future. In one way, we create a covered call. In another one, we create a diagonal debit spread. But those initial positions act as the covering position. So, yeah, that's our whole strategy. I wanted to feature it again because there's still opportunity, even though, Tuesday has passed and we've appreciated. We're expecting this to head back up higher than $31. We're expecting it to probably go maybe as high as $33, $34. And if it stops there, perfect opportunity for us to sell the premium, buy some protection, collar it. If it goes higher, well, then we've got a directional play in place. So I'm really bullish on this Bed Bath and Body Works. I liked it last week. I'm liking it even better this week. Rarely, like you said, do I double down, but I'm double down on Bath and Body
Yeah,
Works.
and as you mentioned, if we looked at the upside, 34, it just on your charts, and so, what is that, like $6 of room still to potentially move? So, yeah,
Yeah,
bed or no bed, Bath and Body Works, ticker symbol
different store.
BBI. AJ's double pick.
Did you notice that I'm in my beach attire?
I didn't know polos were categorized as beach attire, but it is a little
No, look at this
it is
color.
fluorescent. Let's
And look, I've got my lighthouses up. I'm at the beach house. That's what you know what? I think that investors would do well to relax. I know that a lot of us, I mean, I've even said it myself. If you're going to be successful, you got to watch the Twitter, you got to watch the True Social. But, we're getting to a point, and we've actually proven the whole thing bark stronger than bite, taco trade, all of that stuff. Um, just take it easy. Follow your trade rules, right? That's what I'm doing. I decided to leave that whole Washington, D.C. area. I'm down at the Grand Strand. And one thing I noticed, by the way, Sip, walking around here at the Grand Strand, my wife and I were like, man, it seems less busy. And I realized usually in the summer we hear all sorts of Canadian accents. I don't hear any Canadian accents. So, you know, if you guys want to take a break and you want someplace kind of quieter this year, come to the Grand Strand. This is Myrtle Beach in South
Yeah, it
Carolina.
seems as if the leisure idea has really been curtailed due to these ice situations. I mean, it's very
Well, that
very
too.
prevalent around me here in Los Angeles with the raid.
Yes,
I'm
it
seeing a lot of videos.
just started to go crazy in the Washington D.C. area as
And
well.
talking about double down, it seems as if the president and the administration have decided to double down on that concept, even though there was the big parade and the protests and, you know, a lot of
Mhm.
protests. I did want to ask you
Yeah.
about the military parade because that was over in your neck of the woods. Did you get any
Mhm.
feedback from, any of your community?
Yeah, n the day before, so they had already started to close roads, so the day before the parade, my dentist is literally right on Capitol Hill, and I had a cleaning schedule, and I didn't schedule my cleaning, months earlier based on, uh, President Trump's birthday. So I literally spent an hour just trying to cross the bridge from Virginia to DC, to get to my dental appointment. And I called them. I'm like, "Do you want me to turn around?" And they said, "Everybody's late." So, for the locals, it was more of a hassle for having this thing. Plus, all the military equipment really did a number on some of the roads. So that kind of made it. So the locals were like, whatever. Um, uh, but yeah, I don't know if it was as attended as they had hoped. Um, uh, I don't think it for the friends I know that actually went down there. It seems sparsely attended. I think he was a little bit upset, from what I understand, because the maybe the army that was on display there didn't think it was his birthday, but thought it was like the 250th anniversary of the army. So they were trying to be friendly and happy, and he wanted them to be gruff. He wanted to be show strength, and they were trying to be I don't know. Inclusive is a bad word these days. So I think that it didn't go the way that they had hoped. Um, I just know that the locals in the DC area are funny. I remember when a farmer decided to drive his tractor. This is back in the 90s. Drive his tractor up the highway and then parked it in front of the Lincoln Memorial in one of the ponds, and he was protesting, the farm bill at the time. And the locals were like, and he literally camped out at his tractor, and it caused traffic jams. And the locals were like, "Can't the FBI just get a sniper? I'm late for my commute." Right. So the locals in DC really have no tolerance for some of the pomp and circumstance around protests. So I love that people come and do it. Don't get me wrong. I'm all for free speech, but when it bothers the locals' traffic patterns, rush hour is bad enough. They're like, just take them out, right? So that's kind of the take on the parade and all about it. All the locals were like, "Can you just get that done and then get out of here with your tanks so that we can get back to
I
normal?"
do I do agree with your take that it was all the soldiers were a little bit more happy than like, hey, we're a tough military, right? But
Uh-huh. They were trying to show off, all the cool parts about the army, but I'm not sure that's what Mr. President Trump wanted the world to
no, it
see.
was interesting though because they went through all the generations, right? They were like, "Oh, these were the colonial,"
Yes.
and I kind of appreciated that every one of those generations had some sort of technological advance. Like they they were like,
Yeah.
"Oh, this was the first Jeep. We produced 70,000 of these," and they're still like. And then you got
Yep.
into modern warfare, and the modern warfare, you got the robot going, you got these like giant laser beam sniper guns,
Yep.
and
Yep.
it was interesting to see because I don't think we've ever had one of those, but we see a lot of the world powers having them, um, along with all the protests going on simultaneously. Very, very interesting, polarizing times. Either way, didn't have any effect on the markets. But
No.
Just figured I'd ask. All right, we've got a couple more names that we want to run through that we have from our lovely fan base all across the world. They want to know, AJ, if you've got a play in any of these names. So let's go ahead and start it off with Tommy out of China, interested in Enbridge, ticker symbol ENB. This is
Tommy.
completely new name, so I'm gonna dig into the company a little bit here.
Yeah, Tommy, you're getting really active. Tommy was on our show last week. That's awesome. Okay, Enbridge. Enbridge. I like Enbridge. Um, it seems to have found a new level of support, Tommy. We got to see whether $44 holds or whether we go back down to 41. But so the key here is we do not want to do any sort of trade on Enbridge until we get our signal, right? So I'm not sure where we're at with this, Tommy. I guess the follow up question, if I was analyzing this with you, is you know, are you in a short position right now? In other words, did you short this stock? Or so that you make money as it goes down. And when I say short the stock, I also mean there's a possibility that you bought a deep in, a deep in the money, far out in time put option that would act as a substitute, where if the stock goes down $1, your deep in the money, far out in time put would go up in the dollar. That's actually a neat phenomena, by the way. You guys should take note on that you can actually create a substitute for shorting a stock. Sometimes shorting a stock comes with all sorts of fees from your broker, because when you're shorting a stock, basically what you're doing is you're borrowing some of the stock that your broker has in the bank, right? The broker has to have a certain amount of holding in order to be a broker. So you borrow some of their stock, you sell it, hoping that it goes down in price. Then you buy it back at the lower price and return it to your broker. The broker, to loan you that stock for a certain amount of time, there might be fees associated with it. But the alternative is I could actually buy, right? I could buy a deep in the money, far out in time put option, and it would behave the same way, right? I would make money because the put would actually appreciate, but it would appreciate at the same dollar amount that the stock is going down. So it's kind of a neat thing that if you guys don't understand the concept, just make sure you're going far enough out in time and deep enough in the money. So if that's where you're at, Tommy, bringing us back to the subject at hand, then you're looking for the opportunity to sell your put premium, that's the near term at the money put, and perhaps buy a protective call. So, you might want to let it fall further. Let's see if it comes down to about 44. Let's wait for a signal before we do that. And then that's what I would do. Now, if you haven't gotten into that, then again, what you're going to be doing is looking for an opportunity to either buy the stock or buy the substitute call option. And so again, wait for the signal. But this looks pretty good. And the only other thing that I like to do, Sip, is I like to check the option chain. So I'm going to come over here to our trading tool. By the way, anybody can have access to our options lookup tool. Just, sign up for the indicator package and you'll get access to this as well. Let's put the ticker symbol in here. And let's just do a quick look at liquidity. I'm going to look 3 to 6 months out. And I'm going to look at bid and ask prices. It's not bad. It could be a little better, but if you're trading like, under 5, maybe under 10 contracts, this should be no problem. There's enough activity on the options that you could do something. And as far as substitute options are concerned, we can actually use my tool to find those as well. There's some extra features in here for finding substitute options. I like this one. I like the $35 call expiring in January of 2026, going for $10.35 versus the stock price, which is going for about $45. So maybe you look at that particular option as a substitute if you're looking to go ahead and get into this position.
And a little bit more detail on the company, Enbridge, multinational pipeline and energy company headquartered in Canada. So Canadian energy play is how I would probably categorize it, which, may have some movement from any of the trade deals potentially. I don't know if there's energy associated with those, but may want to keep an eye on that news if we're getting into this. So thank you for that, Tommy. We appreciate you hopping on week after week. Moving on to our second name, heading down south, where the weather's probably got to be very lovely these days. Jay in Tampa, Florida wants to know your take on a company called CleanSpark, ticker symbol CLSK. I'm going to look into this one as well.
Well, I like this one. As you can see, I've already been doing my analysis on it. You can see my drawings on here. Here's one thing. So I love the price. This thing is trading in the single digits. It's not considered a penny stock. It's not down here below $5. So I like that. It makes it affordable. I like that it is oscillating between about $8.50 and $10. But I'm not liking how fast it reverses, right? Here's the bottom, but my signals for my traditional indicators are coming late. So I like this. You're going to have to find a way to identify your tops and bottoms quicker than traditional. I don't know if that means speeding up the time frame on the indicators, maybe using some candle patterns or something like that. It can be done, but you're going to need a faster trigger, something to help you identify tops and bottoms. But this is pretty fantastic. We're trading between 850 and 10. Let's take a look at the option chain as far as checking off all the boxes. So CLSK.
And by the way, this is a Bitcoin miner.
Let's look at September options. Yeah. Oh, that's great. I've got all sorts of liquidity here. These are trading every penny. This one looks a little bit out of whack, but I bet if we look at it in real time today, let's do that. I'm going to look at the real time. Here comes CleanSpark. We're looking at the September options. They're trading every dollar. Yeah, that was an end of day apparition. Yeah, this is great. The option chain is very healthy. It's trading every dollar. That means we can design our strategy from like maybe $8 to $10 and really get some traction in between. So yeah, just if you're legging in, because I like to leg into these strategies, if you're legging in, we need something a little bit better than our usual in order to identify the tops and the bottoms. But otherwise, this is good.
Yeah, and I wonder how closely it follows Bitcoin's price, because it seems as if their entire operation is based off of the cost of Bitcoin. From their website, they build these giant like data mining centers, which is an interesting concept.
I think that, what I think you guys could do is you can think about CleanSpark the way we think of Halliburton, right? Halliburton builds the mining facility, right? Or I should say they contract the mining facilities. They build the mining facilities for the petroleum companies, right? CleanSpark builds the data centers for the Bitcoin miners, right? So there's money in the building of these facilities that's different than the money that's generated. So, Sip was asking, I'm looking at the chart right here. This is a 2-year daily chart. It doesn't really track the cost of Bitcoin, because these are more longer plays, right? You build one of these mining sites, you're not going to be worried about the undulations of Bitcoin on a day-to-day level. They're playing this for like the 10-year. People who go to CleanSpark and say, hey, help me build a data center to buy, mine crypto. That's like a 10-year, even longer play.
Yeah, and energy to power these is becoming a big discussion too the past couple of weeks with, like Facebook buying, like cutting a deal with that big energy company. Now that's more AI
Mhm.
based, but it is very similar where it needs its
You know what's
infrastructure.
interesting? I I foresee this in the next 15 years. You ready? I'm going to drop an AJ bomb on you guys. The data centers for crypto mining can be easily pivoted to AI data centers. They're the same exact construction, same exact bill. I wouldn't be surprised if, especially as Bitcoin comes to the end of its, releases. I think that's what, 2037, something like that. That a lot of the interest that's in crypto transitions to the interest in AI. And these data centers that are being generated for crypto are just going to, pivot to AI. Let's see if that happens.
Yeah, I could see there being AI, Bitcoin, crypto integrations, a lot of that. I don't know if you saw, but JP Morgan, I think this week, put out a patent or something, or signed up for their own crypto coin. So
Their own
that would
blockchain.
be interesting to see once a big financial institution comes into play, what it does to a lot of these other coins. But we've
Absolutely.
been positive of crypto for quite some time, and
Everybody, I don't care who you are. If you're watching this show, just get yourself a crypto wallet if you don't already have one. It's just like, knowing about 401ks, knowing about IRAs. You need to, it's that time. Don't lag anymore. Get yourself a crypto
yeah, and
wallet.
most brokerages, or at least the more modern, innovative ones like a Robinhood, give you that accessibility. I think PayPal even does, even Venmo, I think, has an option. So very much integrated into a lot of the payment, modern brokerage systems. All right,
Mhm.
we've got a third and final name for the day to see if we can find some opportunities. This is Richard out of Hartford, Connecticut, wants to know your take on NU Holdings, ticker symbol NU, which I don't know. What's the backstory on this company here, AJ?
Mm. I'll tell you, looking at the pattern, they're in a wait and see. This is textbook, Richard, breakout pattern, right? This is consolidation. NU Holdings, you could see I was looking at this because it's got my telltale lines of support and resistance. But what I really want you to focus on is right here. So it looks like I was looking at it as a premium trade in the past, but let's do something else here with this analysis. Let's go ahead and throw on a different set of indicators. Let's put on this is called the butterfly pattern. Let me get rid of my drawings. So what I've got here is a 5-day, a 10-day, and a 20-day exponential moving average. We call this a butterfly pattern indicator. And let's see if I can find, because this is textbook right here. This is called the butterfly body. Let's see if we can go back in time and find a previous butterfly body so I can show you what happens when you have a butterfly body right here. This is a perfect example. So here's a butterfly body. And then look at what happens right after the butterfly body. So you get this consolidation. And the key measurement is how long do you stay in the butterfly body? That was a long time. That was about a month and a half that they stayed in the butterfly body. The longer you stay in the butterfly body, the bigger of the response afterwards that you expect. So now let's bring this to the present. It's like patterns are repeating themselves. All right. We're just now about a week into this butterfly pattern where the 5, 10, and 20-day exponential moving averages are on top of each other. We want to, start thinking about catching
All right, AJ. I believe we're losing you a little bit here, so I'm gonna take you off screen real quick, and then bring you back in to see if that makes a difference. It looks like it doesn't. So sorry about that, folks. AJ seems to have lost his connection momentarily, but we are looking at NU Holdings, ticker symbol NU. Um, and this butterfly setup. Looks like we've lost AJ's camera here. I'm gonna go ahead and give you guys an opportunity to check out AJ's Quicks links again, real quick. Let me go ahead and take this off the screen here. We've got AJ's quick links here. So we got all AJ's goodies. The link to this is in the chat. Go ahead and show some love on the socials. We've been doing a pretty good job of trying to get some extra content in the mix. So Instagram, TikTok, YouTube, hit that subscribe button. Get access to AJ's free indicator suite here. We've got some more freebies in this little section here. AJ's daily workshop. This is awesome for any new premium sellers. And then, if you didn't know, AJ's got a coaching program. So, if you want a little bit more hands-on training assistance, this is perfect for that. The link to this is in the chat. So, I'm going to go ahead and throw that in there again. I'm gonna go ahead and go offline here for a moment. Sit tight, folks. See if I can get AJ back in the room. Otherwise, let's get this caption up here. Okay. We'll see if we can get him back on in the next minute or two. Otherwise, that'll probably be a wrap on the show, seeing as we're getting close to our hour mark. Yeah, sit tight, folks. All right, folks. Well, it looks like AJ may have lost his connection, his internet connection in the lovely at his lovely beach house. So I'm gonna go ahead and wrap the show up for everyone here. Once again, thank you everyone for tuning in, for joining us. We truly do appreciate it. Feel free to show some love. Hit that like, hit that follow, subscribe button up. Looks like we might have gotten AJ back in. AJ, hey there, hey there.
What happened?
And it looks like we got the boot somehow.
Well, I was telling Richard all about this trade and getting so excited. And I don't know how long I was on my rant, but then I realized nobody was responding.
Well, we had a big pause from you, and then you dropped out the room. So I think it was just more of you did some. We haven't had a setup like this in a while, but we're looking for a breakout. Is kind of where we lost you.
Yeah, and what I wanted to emphasize for Richard, this was new holdings was definitely um new holdings was definitely um one that we were selling premium on. And so if you are in some sort of premium trades are based on being range bound. Breakouts are the opposite. So you need to protect yourself. So if you have your premium sold and your protective option in place, you're protected, right? So that's good. But if you don't, if you're just in the initial covering position, you either want to put that collar in place early ahead of your signal or just liquidate that position. What the pattern is telling you is premium selling isn't working anymore. So, wind that down however you can do that safely and then change gears to catching this breakout. That's what I wanted to say is make sure you're not, sometimes we get so focused in our head that I'm in a premium trade and this is going to be a premium trade. The pattern is telling you that the premium trade is done. Don't stick to the premium trade when the pattern is saying it's not there anymore.
Yeah, and what was this formation called? The butterfly.
Butterfly pattern. That's the 5, 10, and 20-day exponential moving average. And we get this butterfly body. And like we looked at in the past, the longer you stay in that butterfly body, the bigger the response is going to be. We just don't know whether it's going to be up or down. So this is perfect straddle strangle fodder.
Yeah, and a little bit of backstory on the company, Brazilian-based holding company that engages in digital banking services. Got some global names here today on the show. So thank you for that, Richard. Well, I was kind of wrapping things up a little bit when I didn't know you were going to make it back in, AJ. But once again, AJ's quick links are in the chat. Hit that, show some love, hit that like, hit that follow, hit that subscribe. Leave some comments on any of the content because we do appreciate that. And then all AJ's goodies, the indicator suite, the workshop, the custom coaching, a lot of good stuff. So we'd love to see you in there. So head on over there, sign up. AJ, heading into the weekend, it seems as if we want people to relax a little bit. Wait for this noise to I don't know, lessen a little bit, and then get back to business.
I think so. I think, taking a breather this weekend. I know a lot of people took a breather yesterday, but it was hard because there was so much, tension going on in the world. But if you can take a moment of breathing, that's great. But the other thing you could do is, go through your watch lists and compare them to the S&P 500. All charting packages or any good charting packages has the ability for you to, for instance, I'm showing you on this Thinkorswim platform, you can have a bunch of different indices, like here's the S&P, show up at the same time as your symbol. And so you can overlay these things and determine whether or not there's a match. Just look to see if when the S&P goes up, your stock goes up. In other words, find out which of the candidates in your watch list are correlated with the S&P, and which ones are not. And if you want to go the next level, do the sectors. So you should have a list of your watch list and then what sectors they're in the next column. Look at the sectors. Look at ETFs that represent the sectors compared to the stock and compared to the S&P 500, and see where the correlation is, because you could still sell premium. There's always candidates out there for selling premium. You just don't want it to be correlated right now to the broad market, right? And at the same time, if it is correlated to the broad market, you want to change your focus to capturing breakouts. So that's really where we are right now.
Yeah, and I would say, for the sake of humanity, maybe we could bring some of these skirmishes to an end and get back to, economic rationale for why things go up and down. But we can only be hopeful, and it seems as if there may be some potential to things de-escalating, which I think would bring a little bit of joy to the whole world. So with that, AJ, I thank you for your time. I thank the lovely audience that we have tuning in every week for joining us. We truly do appreciate it. Once again, show some love. Hit that like, hit that follow, hit that subscribe button. If you have any questions about what we've discussed, feel free to leave us a comment, send us a DM, head on over to the website, hit that contact area. And we've got a team here to help answer some questions. So AJ, I hope you enjoy some of the lovely summer house, summer activities. We'll catch you next week. And yeah, adios, folks.
Take care, everybody.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh